Hello and welcome. I'm Janne Muta, the Chief Market Analyst for TIOmarkets. Today we will focus on JPY pairs as the Japanese government is considering new stimulus measures. This has prompted the traders to sell the JPY, and in this video we'll take a look at the key price levels and formations that will guide you in your trading. Watch this video only if you agree with this disclaimer and with the fact that we don't provide any investment advice. Okay, here we have USD Yen in the daily time frame, and as we all know, the Fed is likely to raise rates soon. So any action that the Fed is going to take is more likely to be dollar bullish, and now we have the news that the Japanese government is planning new stimulus, which is bearish for the JPY. So that's why we have this market rallying higher. Actually, all the yen pairs are moving higher at the moment, so we're going to take a look at more than this one market, but let's start with the USD yen as it's the biggest. So the market has moved about 0.43% already, so about 50 pips. But you know, 50 pips is very small when we talk about central bank activity. So it is more likely to set the sort of mode of the market or the mood of the market for the next 2 to 3 weeks at least, maybe even longer. So let's see where the key levels are at the moment, and let's start with the channel analysis, and we go roughly from here to, and we can see that this market is really trading depending on how you draw the channels, obviously, but it's whichever way you draw them, the market is trading fairly close to the upper end of the channel. So we might get a pullback, but I think it might be unlikely in this environment because we have the big money rolling into USD yen on the long side. So looking at this market, where the key levels are, just a moment. So the first key level is definitely here, and to give you the exact values, this high is 111.11. So this was the resistance level before the market was able to push higher, and if we sort of pay attention to other levels too, even though I don't think it's likely that the market will come all the way down here, but the next key level is down here. This is the low of 110.41. Now, with a market like this, we obviously can trade the intraday levels when we identify those, but as I try to keep these videos short, I don't want to go into all the nitty-gritty of intraday levels, but basically it is suffice to say that in technical analysis, all the technical concepts are applicable to all the time frames. So if you see market making formations or creating support and resistance levels, those same principles apply in the intraday charts also. So in these charts, I'm concentrating only on the most important levels. Now, just to give you an idea, if we take, let's assume that the market still retraces back from this channel high, because it's always a possibility. So let's try to understand where the key levels are in terms of Fibonacci retracements. Now we can see that going from this prominent low to the latest high gives us a confluence area down here. We have the 23.6 Fibonacci retracement, and we have this key low, and we have 20-day moving average here. So if the market retraces all the way down into this box here, and the levels are from 110.23 to 67 or so. So here's the confluence area that is going to be highly important should there be any bearish news that would take the market down. That, like I said, with the central bank news in play, I don't think that's very likely. It's more likely that this market retraces a little or not much at all and keeps on going higher. That's my sort of main scenario here. If the market comes down here and then breaks this support and moves lower, then that's obviously very bearish, and then something is really badly wrong. Maybe the Fed has changed its mind, or the Japanese have changed their mind about the the new central bank policy. But as long as the current news about the Japanese bringing more liquidity into their economy and increasing the QE, then we believe that the market is more likely to go higher. And obviously, if the Fed keeps on tightening and talking about tightening, then this also supports USD yen and keeps this market bid. Okay, the next bullish market here is New Zealand yen. And as you can see, this market pulled back to 50% line, measuring from this prominent low here, and then started to rally. Why did the market drop from there? A couple of reasons. Let's look at some basic trend line analysis. As you can see that this level was a break of this sort of breaking point of this trend line, and then we had the moving averages there, so the market reacted lower from this technical confluence. Now, however, we have some new data in the market. We have the Japanese government thinking of new stimulus measures, so this helped the market to put in a higher reactionary low. So obviously we don't know how far this market's going to go. We don't know if it's going to go only here or maybe it rallies all the way up here. That would be a 3% move. That's obviously possible. We don't know the future, and we never try to know the future, obviously, because it's just sort of a vain effort. We never know the future anyway. So let's just concentrate on what we see in the market. At the moment, we can see that there's a higher low in place, and we know that the other yen pairs are moving higher, and we can see that this market has rallied from yesterday's close about 0.5%. So that's a significant move already on its own. But even if it moves another 50 to 70 basis points or maybe even more, I think there's some potential here in this market. So the key levels, obviously this low here would be 76.21, and the next key resistance level is up here where we have the 50-day moving average and this high of spot 47, 78 spot 47. So that's obviously a level that will need to be overcome in order to get to the next sort of significant reactionary high, or the sort of high for this past few months actually. So that would be 80 spot 18. But at the moment, it looks like this market is moving higher, and it's likely to challenge this level, maybe it will go even further. But where this, obviously we have to consider the opposite, where the market might turn bearish. So if we get a move that violates this low here, then obviously that's bearish, and then it's more likely that the market will move to the next confluence area here, which is the low and the 50% Fibonacci retracement. On the upside, we are actually entering into this confluence area where we have the moving averages and we have this reactionary high. So that could be, this area could be a bit of a struggle, but with the higher low in place and with the New Zealand yen moving higher with all the other yen pairs. So I think there's a good chance this market will challenge this level and maybe even move further. CAD yen is kind of similar case here. The market retraced to the 50% level, penetrated it slightly, but now has been rallying and creating a higher low. So with the current news, this looks like a long candidate as well. So again, the key levels here, let's look at this low basically here is the nearest key low, 88.90. And the next level after this is at 87.96. I think the reasons are much the same. We don't need to repeat what the Japanese government is doing, but because we have this higher low here, I think it's likely that the market will challenge this high, the next key resistance area, which is, or the key level, which is at 90.40, and maybe we then see a move all the way up here to the 91.14 area. That would mean we have about 0.5 to 0.36% upside potential here. And again, this market is likely to turn bearish if we get if this low of 88.90 gets violated. And just briefly before we move on from this pair, let's look at where the channel high is going to be. So if we connect those lows and then move at the top of the channel here, if the market manages to push above this level, really the high from May this year, if the market manages to push higher, then we might even have something like, we might even have as much as 2.8, maybe 2.9% upside here, depending on how fast the market moves there. Obviously, what happens with the Canadian dollar will impact, and we have a big day on Friday. We have the Canadian payroll data also coming out, so that's going to be an impact there. And what happens with oil? If the oil keeps on trending higher, then that might be a hindrance for this. This might be a supportive factor for this this trade idea, this CAD yen long, because obviously if the price of oil goes higher, moves higher, then we have more support for the Canadian economy and the currency likewise. So this is what I'm seeing here in CAD yen. And then AUDJPY, AUDJPY is a little bit more rangy as the previous markets. We can see how the market has been trading really between, say, this low here, which is 82.28, and the high, and actually we could say this is probably a better definition of the upper end of the range. So this high here defines the range better than this high, because that's only just a spike. Now here we have the high of 85.44, and here's the low of 82.28, and this is the range that we have had this market in for quite some time. Now anyway, we have the market that has created a higher low, and we have news on JPY that makes the currency weak. So it looks like this market is moving higher as well. And the upside potential here is to the next level, about 1%. Let's draw a line there, because that's obviously the key resistance, and we need another line here. So the key support 82.81, the next key resistance 84.25, and this is where we have the moving averages also, so that's a confluence area here. Now if we get a move up there just to the lower end of the confluence area, that's about 0.6%, not a bad move, even if it was without any leverage at all. And then if we go and move beyond this to the recent highs, to the upper end of the sort of medium term range here, then that would be about 2.35%, which is a very, very decent move. So this is the situation here at the moment. The market also here going higher. If we fail to rally, and if the market violates this low of 82.81, then that's bearish, and then we should look elsewhere when it comes to long trades. I hope this video was helpful. If you have any questions regarding trading or the markets, let us know. leave us a comment, leave us a question. We are more than happy to help you out there. And also maybe you can subscribe to the channel and tell your friends that there is good stuff available for free. That would be really, really highly appreciated. So thank you for your time. Trade safe and never trade without stops. See you soon. Cheers. Bye bye.